Did you ever think wood could break the American housing market? In 2025, it's not inflation or interest rates or land shortages causing the biggest headaches for builders. It's lumber. The same planks that frame our homes, schools, and neighborhoods have become the flashpoint of a quiet economic battle. A trade war fought not with sanctions or press conferences, but with container trucks, tariffs, and building permits. And the cost? It's already reshaping your future, even if you haven't noticed yet. This is the story of how a 2x4 turned into a $10,000 problem. And why Canada, once America's closest trade partner, is now quietly reorienting itself away from the U.S. Let's dive in. It started in February 2025. The U.S. government passed a new policy, a 25% tariff on softwood lumber imported from Canada. Officials called it a move to protect domestic producers. But what they didn't say was that this tariff wasn't new. It was stacked on top of two existing duties, a 14.5% countervailing duty and a 20.5% anti-dumping tax. By the time the dust settled, the total tariff burden on Canadian lumber had climbed to almost 40%. That means if you ordered $10,000 worth of lumber from British Columbia, by the time it crossed the border, it cost nearly $14,000. For large shipments, it was catastrophic. A $50,000 load now carried $20,000 in tax. And the industry reacted fast. Prices of construction-grade lumber surged by up to 15% within 6 weeks. Builders, already struggling with razor-thin margins, were forced to delay or cancel projects. For the average 2,200 square foot home in the U.S., the cost of wood jumped from around $25,000 to more than $37,000. That's an extra $12,000 just in framing material. For working families, that $12,000 isn't a rounding error. That's tuition, medical bills, a car, or the difference between buying a home and renting indefinitely. And then came the chain reaction. Weyerhaeuser, one of North America's timber giants, posted a 50% drop in quarterly profit. Their earnings fell to $87 million, less than half the year before. And their forecast for the next quarter was even worse, a projected loss of $60 million. The company's stock plummeted. Shareholders panicked. Executives announced a desperate share buyback program and plans to accelerate domestic timberland investment. But here's the truth. Domestic reforestation is a long game. It takes years to grow what Canada already has today. You can't fast-track forests. And while Weyerhaeuser tries to hold the line, hundreds of smaller timber companies, especially on the U.S. side, are scaling back, laying off workers, or closing entirely. This isn't just affecting lumberyards. The entire housing ecosystem is under strain. Contractors can't plan costs. Developers are shelving projects. Families are backing out of deals. In California, Texas, and Florida, where population growth remains high, stalled housing projects have started to appear like skeletons on the edge of suburbia. Half-built homes, empty frames, delayed dreams. And it's not just the structures, it's what they represent. Stability, ownership, family. Now, a growing number of Americans can't afford what their parents took for granted. Meanwhile, Canada is playing a very different game. Ottawa didn't retaliate with more tariffs. Instead, it pivoted. Quietly, effectively. Lumber exports to the U.S. dropped by 10% in the first half of 2025, from 78% to 68% of total Canadian lumber output. Where's the rest going? Europe, Asia. New alliances are forming. Canada is rebalancing its entire timber trade strategy away from the United States. And it gets even more strategic. Rather than slap countermeasures, Canada is considering something even more disruptive. Self-imposed export quotas, a voluntary reduction in lumber exports to the U.S. No retaliation, just a slow turning of the tap. If that happens, it could create artificial scarcity in the U.S. timber market, driving prices even higher, especially in states like Oregon, Washington, and Michigan, where imported Canadian lumber has historically filled the gap. But this isn't just about materials. This is about identity. For decades, the American dream has been built on the promise of owning a home, a backyard, a garage, space to grow. But what happens when lumber becomes too expensive to build that dream? What happens when contractors can't afford to quote projects because the market's too volatile? What happens when developers can't access predictable supply chains or pass costs onto buyers already squeezed by 7% mortgage rates? You get paralysis, and we're already there. In May 2025, new home sales dropped to their lowest level in 3 years. And not just in blue-collar towns or rural areas, but in booming metros like Austin, Charlotte, and Phoenix. Builders are stuck. Homeowners are priced out. And the timber industry, ironically, is drowning in unsold wood. Wholesale prices have collapsed from $520 per 1,000 board feet in mid-2024 to just $390 in mid-2025. But because of tariffs, input costs remain high. The math doesn't work. Profit margins are evaporating. Every 1,000 board feet now carries 8 to 20% extra in cost just from duties. Multiply that by the millions of board feet needed each month, and you start to see the scale of this crisis. And this pain doesn't stay in the forest. It echoes through logistics. Railroads are cutting frequency. Truckers are losing routes. Warehouses are filled with inventory no one can afford to move. Even the big players are bleeding. Home Depot and Lowe's have both reported a drop in lumber product sales. Small independent builders say they're refusing new contracts until the market stabilizes. In some cases, construction timelines have stretched from 4 months to 8, just due to uncertainty over wood availability. The U.S. government insists it's taking action. Permitting for domestic logging on federal lands has been expanded. Quotas have been raised. The hope is to make up the shortfall by cutting more American trees. But experts warn, it's not that simple. Forest expansion takes time. Automation demands capital. And rebuilding domestic supply chains from scratch? That's a decade-long project, not a quick fix. Meanwhile, Canada is doubling down on modernization. AI-powered sawmills, sustainable forestry programs, export pipelines to Germany, South Korea, and India. They're not reacting, they're evolving. And quietly, Canadian timber is becoming a global commodity, while the U.S. is stuck in a self-inflicted bottleneck. So here's the real question. Was this all worth it? Did we protect American industry, or just shift the pain downstream? Because right now, what we've built is a housing market no one can afford, a supply chain choking on its own inventory, and a dream that's quietly being priced out. What do you think? Are these aggressive trade policies a step toward independence? Or are they the kind of economic nationalism that hurts the very people it claims to help? Leave a comment. Let's talk about it. And if you want more stories that show what's really driving the economy from the inside out, don't forget to like, subscribe, and turn on notifications. We've got a lot more coming.